Every day, over 800 people move to Florida. Many are chasing a seamless retirement in places like the Villages or Sun City Center. But behind the brochure promises, new data shows retirees here risk spending $20,000 to $25,000 a year on basic costs, with insurance alone doubling since 2019. If two of Florida's biggest retirement dreams are straining under the weight of rising fees, aging infrastructure, and overburdened hospitals, what happens to everyone who bought that same dream? The real numbers reveal a reality most newcomers never see. And what you'll discover next might make you question where paradise ends and the nightmare begins. At the closing table, the dream of Florida retirement gets its first reality check. In the Villages, buyers face a median home price hovering between $430,000 and $460,000 in 2025, with new neighborhoods often pushing even higher. But the purchase price is only the beginning. Every new homeowner receives a bill for the amenity fee, $204 a month as of this year, adjusted annually for inflation. That fee covers access to recreation centers, pools, and the sprawling network of golf cart paths, but it is not fixed. The fee rises with the Consumer Price Index, and recent years have seen steady increases. Then comes the Community Development District Bond Assessment. For most homes, that means a debt of $20,000 to $30,000, paid over 20 to 30 years unless prepaid at closing. This is not a voluntary add-on. It is a legal obligation tied to the property, with annual installments layered on top of the amenity fee. In some districts, the bond charge can run several $1,000s a year, and new construction brings fresh bond issues with each expansion. Residents often describe the paperwork as a stack of official statements, one for the purchase, another for the bond, and a third for the monthly fee, each with its own escalation clause. Across the state in Sun City Center, the numbers look different but carry their own surprises. The typical home sells for $300,000 to $350,000, about 25 to 30% less than in the Villages. Instead of Community Development District bonds, buyers here pay homeowners or condo association fees, usually between $100 and $300 a month, depending on the neighborhood. Kings Point condos, for example, sit at the higher end of that range. There is no bond debt, but association fees can rise with annual budgets and, in older sections, special assessments for repairs. Residents recall letters announcing fee hikes or one-time charges, especially after reserve studies reveal funding gaps for roof replacements or drainage upgrades. For some, the attraction is the absence of long-term bond debt. For others, the risk lies in unpredictable special assessments, which can arrive with little warning when infrastructure needs catch up to aging buildings. On paper, Sun City Center's lower home prices and absence of Community Development District bonds look like a clear advantage. But the monthly cost gap narrows quickly when association fees escalate and special assessments appear. In both communities, the financial reality is more complex than the sales pitch. The sticker price is just the start. The fine print, amenity fees, bonds, or association dues can add thousands to the annual budget. For many retirees, the real question is not just what the home costs, but how much the community will ask of them year after year. Insurance costs now overshadow nearly every other line on the retirement budget. In Florida, average homeowners' insurance premiums have doubled since 2019, with the Florida Office of Insurance Regulation reporting a 102% increase through 2025. For retirees in the Villages or Sun City Center, that means annual premiums of $14,000 to $18,000 are no longer unusual, even for homes located far from the coast. Independent agents describe a constant stream of phone calls from residents shocked by renewal notices. Policies that once cost $5,000 a year now arrive with five-figure totals, often after a single claim or a carrier's exit from the state. Some homeowners faced with non-renewals scramble to find any insurer willing to write a policy, sometimes accepting higher deductibles or reduced coverage just to keep their mortgage lender satisfied. For those in older homes, roof age and past water claims can push premiums even higher or lead to outright denial. Property taxes add another layer to the monthly squeeze. Both Sumter and Hillsborough counties voted to raise millage rates in 2024 and 2025, citing the need to fund stormwater upgrades and infrastructure repairs. The typical bill for a standard home in either community now lands between $4,000 and $5,000 per year. These increases are not just line items, they show up as real impacts on fixed incomes, with some residents attending county meetings to protest the rising tax burden. County Commission minutes record heated debates and split votes, but the outcome remains the same: higher annual property tax bills, often with special assessments attached for local improvements. Utilities have quietly climbed as well. Water and sewer fees in both Sumter and Hillsborough have risen by 6 to 9% annually, according to the latest county schedules. For a retired couple, that means another $2,000 to $3,000 a year just to keep the taps running. Add electricity, trash, and basic services, and the total grows. Residents often report that their utility bills outpace inflation, especially after the installation of new meters or the rollout of tiered usage rates during hot summer months. When all these expenses are tallied, the picture becomes clear. Before factoring in food, travel, or healthcare, a typical couple in the Villages or Sun City Center now faces $20,000 to $25,000 per year in basic carrying costs. Insurance, $14,000 to $18,000. Property taxes, $4,000 to $5,000. Utilities, $2,000 to $3,000. Fees and assessments, $2,500 to $4,000, with the potential for special assessments in older neighborhoods. These numbers are drawn directly from official schedules and public records, with each line backed by county ordinances, Florida Office of Insurance Regulation reports, and association budgets. For many retirees, the sticker shock does not end at the closing table. It grows with every renewal notice and every vote to raise local rates. As one resident put it during a recent HOA meeting, "It is not just the price of paradise, it is the price of staying put." Boards in the Villages and Sun City Center hold the authority to set fees that shape daily life, but the foundation of their power differs sharply. In the Villages community development districts, created under Florida Statute 190, begin under developer control, shifting to resident-elected boards only after most homes are sold. Those boards approve annual maintenance assessments and new bond issues for infrastructure, from roads to recreation centers. The law grants CDD the ability to levy non-ad valorem assessments, which show up on property tax bills and carry the same legal force as taxes. If a homeowner falls behind, the CDD can place a lien that outranks even the mortgage, and after required notice, initiate a tax certificate sale. Each year, a handful of CDD foreclosures are filed in Sumter County, usually resolved before auction as residents pay up or redeem the lien. The risk, though rare, is absolute. Failure to pay can cost a resident their home, regardless of mortgage status. A CDD official puts it plainly. These are not optional. Bond assessments and maintenance fees are tied to the land. If unpaid, the tax collector enforces them like property taxes. The size of these fees depends on the outstanding bond principal, the interest rate set at issuance, and the district maintenance budget. Newer districts, with larger projects, often mean higher annual assessments, sometimes several $1,000s plus the amenity fee. Residents may prepay the bond, but most spread payments over decades. Budgets, bond schedules, and meeting minutes are posted online, but the details can overwhelm even experienced buyers. Sun City Center's system is different. The Community Association and a network of condo and homeowners associations run by resident elected boards from day one, set budgets and assessments. Reserve studies, often by outside engineers, determine how much must be set aside for repairs. When reserves run low or an unexpected repair hits, the board can levy a special assessment, sometimes requiring a member vote. Florida law mandates at least 45 days written notice before foreclosure for unpaid assessments and caps late fees at $25 or 5%. Still, the association lien is enforceable by court order, and most cases settle before a forced sale. A longtime Sun City Center board member says they do not want to levy special assessments, but if the reserve study says reserves are short, they have to act. The law requires them to maintain the property. If people do not pay, foreclosure is possible. It is rare, but it happens. At UF Health, the Villages Hospital, the numbers on paper tell only part of the story. The facility offers 307 beds, with a recently expanded emergency department at Brownwood. Yet for a population now topping 140,000, even routine care can mean long waits. During peak season, retirees describe ER visits stretching 4 and sometimes 8 hours before a doctor appears. The surge in new residents has outpaced every attempt to grow hospital capacity. Administrators point to recruitment efforts for more physicians, but Florida's statewide shortage means competition is fierce. The American Association of Medical Colleges ranks the state in the bottom quartile for physicians per capita, and Medicare-accepting specialists are in especially short supply. One hospital administrator, speaking at a 2025 board meeting, described the challenge as constant triage, with new wait time software deployed to manage the flow, but little relief in sight. In Sun City Center, South Bay Hospital operates with just 138 beds. While the community is smaller, 30,000 residents, the demand for care is just as pressing. An ongoing expansion project promises more capacity, but for now, bottlenecks persist. Local news reports document retirees waiting hours in the ER, and many describe driving 45 minutes or more to Tampa or Bradenton for specialist appointments. The Florida Department of Health designates both Sumter and Hillsborough counties as primary care shortage areas, a label that brings federal funding but does not fill the gap overnight. Residents recount calling a dozen offices before finding a doctor who will accept new Medicare patients, especially for cardiology, orthopedics, or oncology. The promise of convenient, top-tier medical care is a major selling point for both the Villages and Sun City Center. But the reality is that population growth and a graying demographic are pushing local health systems to their limits. ER expansion projects and recruitment drive signal effort, not resolution. For many retirees, the hidden cost is not just in dollars, it is in time, uncertainty, and the stress of navigating a system stretched thin. The bottleneck in healthcare access becomes another line item in the ledger, one that cannot be measured solely by hospital bed counts or glossy brochures. FEMA flood maps draw a jagged line through both the Villages and Sun City Center, classifying key neighborhoods in zones A, E, and X, designations that mean flood insurance is rarely optional, regardless of distance from the coast. In Hillsborough County, stormwater engineers point to Sun City Center's original drainage network, much of it installed in the 1960s, now nearing the end of its design life. County records show a $23 million stormwater renewal project underway, funded through a mix of infrastructure sales tax and special assessments. For 3 years running, homeowners have paid an extra $420 annually to help cover the cost of relining pipes and expanding retention ponds. Yet a 2025 reserve study projects a further $1,100 to $1,800 per household may be needed over the next decade if state or federal grants fall short. Kings Point, a major subcommunity, faces its own warnings. Assessment letters in 2025 cite underfunded reserves for water and sewer lines, with the possibility of a $2,000 one-time charge if failures accelerate. Sumter County's engineering reports highlight a different hazard, the underlying karst geology that makes the villages especially prone to sinkholes. State registry data confirms a cluster of sinkhole claims in the northern and central sections, pushing insurers to require geological surveys for many new policies. After Hurricane Ian spawned tornadoes in 2022, dozens of homes in the villages required structural repairs, and insurance disputes erupted over whether damage was caused by wind, water, or ground movement. The county's 2025 capital plan allocates nearly $29 million to stormwater basin retrofits and pipe replacements, with Community Development District budgets showing a 17% cost increase for road resurfacing since 2022. In older districts, Community Development District reserve funds now cover only about 60% of projected 10-year repair needs, making future assessment hikes likely. A county engineer summarizes the challenge. Aging infrastructure does not just mean potholes. It is pipes, drains, and retention basins. These are systems built to last 30 years, now pushing 50. Every year we wait, the repair bill grows. For residents, the outcome is the same. Whether it is a special assessment in Sun City Center or a rising community development district fee in the villages, the invisible costs of age and weather eventually surface as real dollars. The next section will show how these mounting risks directly affect resale value and liquidity for homeowners. On a sunny morning in Sun City Center, a Kings Point condo owner waits for her realtor to arrive. The unit, freshly painted and staged, has been listed for 6 weeks. The asking price sits just under the local median of $325,000, but so far there have been only a handful of showings and no offers. According to Redfin and Zillow, the average home here now spends between 38 and 42 days on the market, with condos in older sections often lingering longer, sometimes 45 days or more. The realtor flips through her notes. Buyers are asking about special assessments, roof ages, and future repair bills. She suggests a price reduction. She points out that while Sun City Center's median age is 76, most new buyers are in their late 70s or early 80s, often downsizing from larger homes or relocating after a spouse passes. The pool of potential buyers is shrinking, and younger retirees increasingly look elsewhere for more amenities or newer construction. In the villages, the scene looks different but carries its own risk. New homes still move quickly, averaging about 32 days on the market, but the pace has slowed compared to the boom years. The median resident age is 68, and the community's national marketing machine keeps a steady flow of fresh buyers. Yet conversations with local agents reveal a new pattern. Homes priced above $500,000 can linger for 40 days or more, and buyers are increasingly wary of high insurance premiums and escalating community development district assessments. Some sellers, unable to absorb the rising costs, offer concessions or prepay bond balances to sweeten the deal. The developer's relentless expansion creates a sense of urgency, but also raises questions about how long demand can keep up with supply. Liquidity risk is no longer a distant worry. In Sun City Center, the market relies on a smaller, older buyer base and faces mounting pressure from aging infrastructure and special assessments. In the villages, turnover remains brisk for now, but the cost of entry and of staying continues to rise. For both communities, the dream of an easy resale is giving way to a reality shaped by demographics, buyer caution, and the unrelenting math of carrying costs. The promise of paradise is now tied to the willingness of the next generation to shoulder its burdens. Today, over 400,000 newcomers a year chase Florida's retirement dream. Yet escalating insurance, shrinking healthcare access, and aging infrastructure now define the reality. As fixed incomes face unpredictable costs, the promise of paradise is being redrawn in real time. The question is no longer which community wins, but whether the system can keep its promises to those who built their futures here.